250 billion. I'm still processing Elon moving a small country's GDP from his left pocket to his right pocket.
Oh, stop. It's not a vanity transfer. SpaceX buying xAI just dragged global M&A past the 1.2 trillion mark.
It's pure banker euphoria? 12 mega deals? We haven't seen volume like this since 2008. It feels reckless.
You're just traumatized. The structure is actually bulletproof. Wait until you see the financing footnotes. The rundown? $14.2 billion to casually buy back a 49% stake in your own Irish fab.
Intel is just doing financial gymnastics at this point. You spin it out, you buy it back. The circle of life for semiconductor capex.
It's a massive flex. But read the footnotes. They're just terrified of losing control over their manufacturing base.
Speaking of control, Uber is buying Blacklane. Moving straight into the white glove chauffeur business, I love this. Lock in the premium corporate traveler.
I completely hate this deal.
Wait, really?
Yes, you're trading pure software margins for physical operations and angry, the big one.
$250 billion. I just need to say it out loud a few times to make it feel real. 250 billion.
And yet, global deal volume is actually down overall. That is the wildest part of this first quarter data. Total M&A value crossed 1.2 trillion, up 26% year over year, but it is entirely carried by these massive top-heavy mega deals.
12 deals over $10 billion. We have not seen a quarter like this since 2008.
Which is exactly the year I do not want to be compared to right now.
Fair. But look at the driver. Market analysts are pointing out that the AI space race is single-handedly reviving the blockbuster deal. Top-tier transaction values are up 155% compared to last year. And SpaceX absorbing xAI is the absolute crown jewel of that narrative.
I have to stop you right there. Crown jewel? Nate, it is Elon buying his own AI company with his other company's equity. You cannot look at that $250 billion price tag and tell me it is a purely rational market valuation. It is an incestuous paper money deal.
I completely disagree. I think it is entirely rational if you look at the big picture. SpaceX needs autonomous systems that can operate completely off-world with zero latency. You cannot rely on Earth-based server farms when your hardware is halfway to Mars. They are treating xAI like an internal organ they need to transplant directly into their rockets.
Okay, the technical use case makes sense. I am not arguing the engineering synergy. I am arguing the math. 250 billion. Where is the fairness opinion on that? Who is sitting in the boardroom signing off on a multiple that just magically anchors the highest value AI transaction in history?
Well, Sullivan and Cromwell advised on it. And as a former banker, I am having a deeply spiritual reaction to whatever advisory fee they just pulled down.
Oh, I bet. They probably build enough to fund their own lunar landing.
Exactly, but you have to admit, it is a brilliant strategic move to consolidate the empire before the IPO window completely reshapes the AI landscape.
I will admit it is a fascinating piece of corporate theater, but this one deal is distorting the entire global M&A picture. If you strip out SpaceX, North American acquirers are actually lagging behind their benchmarks right now. You would never know it looking at the headline numbers.
True, it is totally masking some really interesting dynamics across the pond. European dealmakers are quietly gloating right now. They are outperforming their non-M&A peers by 6 percentage points.
Which is exactly why we need to talk about what is happening in the infrastructure space. Because while everyone is staring at the SpaceX rockets, Apollo is down here on Earth playing three-dimensional chess with their portfolio.
Oh, you mean offloading Sapphire Gas Solutions to Antin, while simultaneously scooping up Gatehouse Living over in the UK? Let me tell you, Apollo is playing both sides of the table right now, and they are not the only ones making massive moves. Voices. I keep hearing this narrative from analysts that AI is single-handedly reviving the mega deal. They are throwing around this stat about a 155% surge in top-tier transaction values compared to last year.
I saw that note. Single-handedly is doing a massive amount of heavy lifting there.
Oh, come on. Look at the SpaceX and xAI deal. $250 billion. That is the literal definition of AI dragging the market kicking and screaming into $1 trillion quarter.
Sure, the xAI deal is a monster, but read the actual transaction logs. Intel is buying back a 49% stake in its Ireland Fab joint venture for $14.2 billion. That is hard infrastructure, not software hype. You cannot tell me AI is the only thing moving the needle when we have 12 mega deals over $10 billion this quarter.
Fair point. But the bankers actually executing these deals are singing a different tune. They are warning that even though financing conditions eased up, stubborn inflation and Middle East volatility are stretching out due diligence timelines to a painful degree.
I read that as a convenient excuse. North American acquirers are just lagging behind their benchmarks and blaming geopolitics.
Wait, really? You think they are just covering their tracks for slow execution?
The performance data proves it. European dealmakers are quietly gloating right now. They are outperforming their non-M&A peers by a full 6 percentage points. They are not crying about due diligence timelines.
That is hilarious. Meanwhile, you have Apollo just ignoring the macroeconomic noise entirely and playing both sides of the table.
Selling Sapphire Gas Solutions to Antin, while simultaneously scooping up Gatehouse Living in the UK.
The private equity fee machine never sleeps.
True, but those energy plays are getting complicated. I am watching to see if rising energy prices start stalling out these pending cross-border infrastructure deals.
Which perfectly tees up what we are tracking for tomorrow, especially with that ticking clock over at Gilead. Spill the tea. I just love the absolute arrogance coming out of London and Paris right now.
You mean the 6% outperformance?
Yes, European dealmakers are beating their non-M&A peers by 6 full percentage points, and they are not being quiet about it. My inbox is full of very polite, very smug emails. Meanwhile, North American acquirers are just sweating, completely lagging their benchmarks.
Okay, but let's be fair here. Look at what's actually driving that volume. Half of it is just Apollo playing musical chairs.
Oh, the classic Apollo double dip.
Exactly. They offload Sapphire Gas Solutions to Antin and simultaneously scoop up Gatehouse Living in the UK. It's just private equity moving capital from the left pocket to the right pocket across the Atlantic.
You're so cynical. That takes serious execution. You try running 2 parallel cross-border deals in the same week while inflation is still a mess.
I'm not saying it's easy, Nate. I'm saying it skews the scoreboard, just like Intel skewing their own balance sheet. Did you read the filing on that Ireland fab?
$14.2 billion to buy back their 49% stake.
$14.2 billion to buy back a joint venture stake they literally just sold. It's corporate whiplash. They're just undoing their own financial engineering.
I actually think it's a smart pivot. They needed cash back then. And now the AI chip race is forcing everyone to lock down capacity. It's totally defensive.
Oh, come on. You can't spin a $14 billion reversal as a strategic masterstroke. They panicked, sold the living room furniture to pay the rent, and now they're buying it back from the pawn shop at a massive premium.
Spoken like a true journalist. I guess next you're going to tell me Uber buying Blacklane is also a terrible idea.
No, I actually love that one. Premium chauffeur service makes perfect sense for them. But speaking of massive AI premiums forcing people to do crazy things, we need to talk about the rocket in the room.
$250 billion for xAI? Tomorrow's radar. Keep your eyes on Gilead tomorrow. The extended expiration for that Arkelix tender offer is finally hitting.
Honestly, I'm way more interested in Apollo playing musical chairs. They just offloaded Sapphire Gas to Antin, and in the exact same breath, scooped up Gatehouse Living over in the UK.
Classic Apollo, sell a car, buy a house. But watch the energy angle. I'm hearing rising energy prices might actually stall out some pending cross-border infrastructure deals.
Stalling? Oh, come on. European dealmakers are literally gloating right now. They're beating their non-deal peers by 6 percentage points. Nobody is stalling. They're just using inflation as a convenient excuse to stretch out due diligence.
Stretching diligence is just banker speak for getting cold feet. Look at Intel dropping $14.2 billion to buy back half its Ireland fab. Capital is getting defensive.
Tell that to Uber buying Blacklane. Chauffeurs, Nate. The gig economy is putting on a tuxedo.
A tuxedo I still can't afford. We'll see what hits the wire tomorrow morning.